Hey guys, welcome back to the channel. In today's video, I'm going to show you a super simple strategy with a high win rate that you can use to trade your personal accounts, your funded accounts. There's no daily bias required and it's a set and forget method, a super simple way of trading. So without further ado, let's just go ahead, explain it, and then we will go and do some backtesting. So first of all, as you can see, we have got the previous daily high and the previous daily low. So what we're kind of looking for is we're looking for a take of the previous daily high or the previous daily low. So for example, if we take the previous daily high first, what we will do is we will then look for shorts, and then that will be our bias for the day. And then if we go ahead and take the daily low first, we will then sort of look for longs, and then that will be our bias for the day. What we're doing is we're kind of trading the Judas swing and the initial sweep of liquidity below the previous daily low or above the previous daily high. So very simple method. We are going to target a 1 to 2. It's a set and forget method. If you want to go break even, I would suggest going ahead, backtesting this and seeing, how it does affect your profits and things like that. But for me personally, this is suitable for people who've not got much time at the charts. Maybe they've got a full-time job, maybe they've got other, commitments outside of trading, and maybe they just don't want to spend that much time at the charts. This would be absolutely perfect. So the time frames we are going to be using for this strategy is the daily and the 15 minute. So all you simply need is 2 time frames. So what we're looking for first of all is to come up on the 15 minute, take the previous daily high, and then we're looking for some sort of displacement and a fair value gap being made, sort of here. We don't need to see a market structure shift, which is the beauty of this strategy. Really simple, like I said before. And then once we get a fair value gap, if it, gives you a relatively good stop loss size and the candles are not too big, you can look to take an entry, stop above the highs, and then we can look to target 1 to 2 back into the range. Again, if we do get a continuation within New York, we will then look to take another trade during New York. But if we come all the way down to the previous daily lows and then we get a displacement to the upside, we can then look to take a trade long back into the range. So it's a very simple method, really good trading strategy, and it's something that could really change your trading for the better. So let's just jump onto the charts and we will do a little bit of back testing. Let's just see how long we can get through, sort of where we do 1 week, 2 weeks, 3 weeks, maybe up to a month, depending on how long the video is. I don't want to drag it on for too long, but if you see a couple of examples and we backtest, a good couple of weeks and see kind of what our win rate could be and sort of kind of the profits we could make, that's absolutely fine and we can go from there. So let's just jump up to the daily chart. So we're on the daily chart and we will look sort of at an area where we could backtest. So what we can do is we can go back to sort of, so let's just go to the 1st of June. So we'll go to the 1st of June and we'll backtest from here, and like I said before, we'll see how far we can get and just see sort of how much we can backtest without the video being super long. So what we want to do simply is get our horizontal ray right here. So get an horizontal ray. We then want to mark our previous daily high. We want to mark then our previous daily low. And what we can do then is simply drop down onto the 15-minute chart. So one thing that I will mention is my trading times are from around 7:30 up until 10 AM, and then I will come back and then I will trade from 1 PM until 3:30 PM. So they are my personal trading times. If you can't trade these times, that's fine. Again, what I would do is backtest and see how this strategy works sort of in Asia session if you want to trade Asia. But overall, these are the times I'm going to be trading, and this is the times that I'm looking for trades. So what we're looking for now is we're looking to see what gets taken first, the previous daily high or the previous daily low. So we'll just play price forward towards our session. And like I said, my session times are these right here. I will leave them in the description or in the comments. And as always, if you've got any questions, feel free to leave them. At the moment, we are still within this overall range. So we're looking for some liquidity to be taken before we can trade. So do we get a trade during London or New York? And at this stage right here, so we've taken the previous daily high. If we do get some displacement to the downside, I would be happy to look to take a trade. I know there is no opportunity on this specific day right here, so that's the beauty with this trading strategy. Sometimes you won't get any opportunities, sometimes you'll get multiple opportunities in one day, but overall what we're doing is we're trying to preserve our capital, we're trading professionally, and we're not jumping into the market every time we see a sweep of liquidity. So jump back up to the daily, and we can now mark out our previous daily high, and our previous daily low. Drop to the 15-minute, and then we can now play price forward until our session times. So we'll just play price forward, see which gets taken first, and there's something that I do need to explain. So as you can see, at the moment, we've actually had a sweep of the previous daily high before our session. So if this happens, what we can do is we can simply look to, if price comes higher and then we get a displacement down, we can look to take a trade from here. But if we do get a break to the downside and order flow starts coming down, and we do get a displacement somewhere down here, we can look to take the continuation, pull back in and then continue. We can look to take a trade like that. It's absolutely fine. We don't need to take the previous daily high or low in our session timing, as long as we know kind of the direction and the bias that we're wanting to trade in. So let's play price forward, see what happens. So we do come higher, and then we do start coming lower. So we start coming lower, and we do get displacement to the downside. So this is what we are looking for, and this is our setup. So we get a fair value gap between this candle and this candle. And for me personally, I do, majority of the time like to enter at the EQ of the FVG, just to give me a little bit of a smaller stop loss. So we've got a 11.2 pip stop loss. So we'll give it sort of some breathing room and give it around 13 pips. And then we will target a 1 to 2. So, I've not actually backtested any of this data, so we're seeing it now for the first time together. So let's see what happens on this trade. So we're now tagged into this trade. We come up towards our stop loss. Are we going to come down? And we do actually take a win on the first trade, which is absolutely brilliant. So again, like I said, if we do get a trade during London and we do get a continuation during New York, I will be happy to take that. As you can see, there's some sort of news. So we've got unemployment rate and NFP. For me personally, I'm not going to take into account any sort of news on this backtesting session. In real life trading, you will look and potentially not trade today. But as I said before, I am not going to look at any news during this backtesting. So let's play price forward. Do we get a continuation? We do get a fair value gap right here. And I would again be happy to look to trade from this FVG. Entry right here at the 50%, stop above this high, so 13.3, give it around a 15 pip stop loss, and then we can look to target our 1 to 2. As I said before, if you want to go break even, that's absolutely fine, but what I would do is I would test this, because what I've kind of sort of looked at is to make this a set and forget method, and it's something that once you set this order right here, you can then walk away from the charts, you can start doing other things or something like that, and then you can go away and just go about your life and leave it to run. So we do come up, we do get tagged in, and in this example right here, we do take a loss. So we take a loss on this trade. So we've got a +2, a -1. So at this moment in time, we are up +1. So let's just play price forward towards the end of New York session. And that's absolutely fine. We take 1 win, 1 loss on this day here, jump up to the daily, and now we want to mark our previous daily high and previous daily low. Drop down onto the 15-minute, and then we can play price forward towards our trading times. So that right there is actually very unlucky. As you can see, we did just get taken out, so we got wicked out of this trade, and then price did continue. So if we didn't get wicked out, we would be 4% up on that day specifically, which would be absolutely amazing. But let's play price forward towards our session timings. And again, we've taken the previous daily low. So if we do get a continuation to the upside and displacement to the upside and a setup, I will be looking to take that trade. In London session, we get no trade because there is no fair value gap or no displacement giving us our setup. During New York, it looks like we now might just continue lower, but after we've had a sweep of the London lows, we could actually now see price move to the upside. And we do actually get a displacement to the upside. But in this case right here, as you can see, this fair value gap is absolutely massive. And for me personally, that's not something that I want to be involved in. So for me personally, on this day right here, I would just sit out of the market and I would just wait for another opportunity on the next day or whenever one comes. So let's jump now up to the daily, mark out our previous daily high, previous daily low. And as I said, guys, this is a super simple strategy, very, very easy to follow, and you only need 2 time frames. There's no daily bias required, and overall it's something that, you know, even a beginner could trade. So let's go through and see what happens. So this right here is a very small range in particular. So we've taken the previous daily high. Do we get a setup in London session? We come up even higher, so we sweep these highs. And our session is now started. Do we get a setup? So there's no fair value gap printed right there. So that for me is not something I want to be involved in. We do get displacement to the downside. We also get a market structure shift, you know, which is an added confluence. We don't need to see a market structure shift, but if we do, that's added confluence to our trade. And enter at the 50%, stop over the high. So 15 pips stop loss. You want to give it sort of 16, 17 pips. So I will give it a 17 pip stop loss and then look to trade a 1 to 2. So this right here is actually quite a big, you know, sort of trade. 34 pip target, which, you know, potentially might not get hit because the overall average daily range of EU is quite small. So let's just see what happens. Looks like we're not going to get tagged, and as you can see, what's happened now is we've not been tagged. The price has run towards our TP, and at this point here, what I would do is I would actually just remove this order because price has now run to TP, and we don't really want price then going and trading back through our stop loss. So for me, that would be a removed order, and then we can look now to see what happens during New York session. And now we've had a take of the previous daily low. So as I did state at the beginning of the video, if we do get a take of the high and then a trade opportunity to the downside, which we did, but unfortunately it didn't get tagged, and then we do come down and take the previous daily low, I will then look to trade back into the range after a sweep of the previous daily low or the opposite direction. So we do actually get a fair value gap right here, but I've played price forward quite fast. So let me just get rid of this candle. For zoom in, as you can see, there is a small fair value gap. If you're looking for more displacement, that's fine. But for me personally, any displacement on the 15 minute is sufficient. So what I would do is I would look to trade from here, stop below the lows. So 9 pip stop loss, I'm looking at around, you know, sort of 11 pips. So 11 pip stop loss, a target of 1 to 2. We've got clear sort of highs here to target. And let's see what happens. So obviously we know now we did get tagged in because I did play forward quite fast. So we're tagged into the trade. And does that hit take profit? Let's just zoom in. So that doesn't actually hit take profit on trading view. Potentially if your broker, you know, does tag you out for take profit on spreads, you know, you might be in profit 2% here, but let's just see what happens. Let's play price forward. This could come back and take us out, which would be unfortunate. So it's hovering around take profit, which is not ideal, but we're just going to leave it anyway. We're not going to close out of this trade. So it does take quite a long time to play out, but eventually it does it 2%. So at the moment we are one win, one loss, one win. So at the moment we are plus 3% by the 7th of June. So 1 week into June we are up 3%, which is, you know, really, really nice. So if we play price forward, well, back, sorry, towards New York, and then we can go back and mark out our previous daily high and previous daily low. So what we want to do is, you know, sort of mark this out right here. Previous daily high, previous daily low, drop to a 15-minute chart and play price forward now towards our session timings. And that's just the beauty of this strategy, you know, it's super simple, and all we're doing is waiting for one of these to be taken, one of these liquidity points, and then we've got our bias, and then we can look to trade in that specific direction. So at the moment, there is no lows being taken. And at this point, you know, price has come down towards the previous daily low. We've got some displacement right here, but We've not actually swept the liquidity below this low, so for me, I would not get involved in this. You know, potentially you could have taken a trade, but the overall idea is this doesn't fit our plan, so I would actually not be involved. Do we get any continuations? Any setups during New York? So we've now taken the previous daily high. So the previous daily high is the first point of liquidity to be taken for our strategy. Do we get a setup? So there is a very subtle fair value gap right here. If we just zoom in and just have a look. So between this low and this high, a very, very subtle sort of fair value gap. I would actually be happy to take that. Like I said, any fair value gap on the 15 minute for me is sufficient. 13.6, so we'll do 15 pip stop loss and target a 1 to 2 risk to reward. And let's see what happens. We're not going to get tagged again. And again, as you can see, like the previous trade that we did see, price has now run towards our take profit without tagging us in. So for me, this would be a deleted order. Get rid of that order. You don't want price coming back up, tagging you in and then taking you out, all within the same movement. Price has run to our take profit, so now for me, this trade would be invalid. So jump up to the daily, mark out our previous daily high, previous daily low, drop to the 15-minute chart, and then we can go and play price forward. So do we get any opportunities? So we've gone a couple of days now, so we took a trade here, a +2, and then there's no opportunities that day, no opportunities this day. So let's see if we can get an opportunity on the next day. So we're still within this range, and as you know, with this strategy we need a previous daily high or low to be taken to even consider a trade. And we've taken the high, and then we are now pushing higher. Do we get a displacement to the downside? We don't, so there's no trade on this day, no trade on this day, so we've gone now 2 days without trade, but that's absolutely fine. For me, all it's about is preserving capital and just trading professionally. You know, we're not taking trades after every single sweep of liquidity, because when you do that, you know, it just sort of leads to disaster anyway. You know, your win rate does drop through the floor. So with this way of trading, super mechanical, super easy, and you know when we're looking to trade once we've taken liquidity. And we're hovering around towards the previous daily high. We've not actually taken any liquidity. So again, I'm not actually looking to trade as of yet. New York session comes back towards the previous daily high. And again, there's no trades. So jump up to the daily, and then we can look for a trade the next day. So we've gone 2-3 days now without a trade, which, you know, some people might be panicking, but for me, all I see is I'm preserving my capital, you know, professional trading, sticking to my plan, being super disciplined, and just waiting for my plan to set up. So do we get a trade on this day? So we've taken the low, and we're now in London. So if we do get a displacement now to the upside, I'd be happy to take a trade. There's no fair value gap there, so I'm not looking to get involved. And, you know, you could have potentially taken a trade from this, but what it looks like now is price just gone without us. So I'll just mark it out anyway. So if you want to take a trade from here, stop below the lows, 11 pips, so around a 13 pip stop loss, 1 to 2, you know, and again, it looks like this is no tag. So remove this order, which, you know, kind of is unfortunate. So we've got 3 no tags now, which all could have been 2% profit, which all did run to target, but, you know, it's nothing to worry about. Do we get any opportunities during New York? So now we've taken the previous daily high. If we get a move towards the downside in New York, so we get a displacement to the downside, you could look to take this trade, but I'll explain to you why I won't take this trade. So you could set an order right there, right? So we've got like sort of 12 pip stop loss and then target a 1 to 2. So the reason why I won't take this trade is because we've taken the previous daily low, we've then moved to the upside, we've come and take out the previous daily high, and it's very, very rare to see, you know, take out the previous daily low, take out the previous daily high, and then price to, you know, retrace all the way back down to sort of, you know, towards these lows right here. It's very, very rare, and it's something that doesn't happen a lot. So for me personally, I would be happy to sit out of this trade and just, you know, wait for the next day and see what happens you know, the following day and see if we get any more trade opportunities. So again, jump back up to the daily. Previous daily high, previous daily low. You know, it might sound like I'm just repeating myself, but you know, that's the beauty of this strategy. Very, very simple. And now play price forward towards our trading times. So we've taken the high. Again, if we do get displacement to the downside, I'll be happy to take a trade. Push a little bit higher. No trades during London. Play price forward to New York. And then it looks like, yeah, we've hit some sort of news. Inflation rates. And yeah, potentially, you know, you might not want to trade after this, but let's see what happens. So we do actually get a fair value gap between this low and this high. A very, very subtle fair value gap, but again, it fits our plan. Trade there, stop above the highs, 16.9. You're looking at around, you know, sort of a 19 pip stop loss. 1 to 2. And let's see what happens. So tagged into the trade. And it looks like we're just hovering around, just consolidating, which, you know, potentially could happen quite a lot after news. But again, it fits the plan, so we're looking to take the trade. And then we're now into the next day. So you could look to take another trade, but because I'm already in this trade, I'm not looking to add more risk exposure to my account. So at this point, I would kind of just sit out and see what happens. And we do get taken out on this trade for a -1. So on this right here, you know, I wouldn't got involved in anything in London, which looks like nothing actually set up anyway. And then potentially I wouldn't get involved in New York. So what we'll do is we'll go through to the next day. Previous day the high, previous day the low, and then drop to the 15. So let's play price forward, let's see what happens, and what we'll do is we'll go to another trade, so whether it's a win or a loss, we will go to the next trade, and then that will be the end of this backtesting session, and then that will kind of be sort of enough to kind of show you the strategy, and then you can go ahead and backtest it yourself. So let's play price forward, let's see what happens. Do we get a opportunity? So during London, again, we're still within this range, not looking for any trades. New York does take the previous daily high, but there is no trades on this day right here. No displacement to the downside after the take of liquidity. So now what we can do is we can go to the next day. So yeah, I hope this is kind of showing how simple and how easy this trading strategy is. All it is a case of is letting probabilities play out. You know, following your plan, executing when a trade setup does come, and you know, this trading strategy is definitely profitable. So we get a take of the previous daily high, we start coming to the downside. At this point, if we zoom in, as you will notice, there is no opportunity to get involved. Still no opportunity, still no fair value gap, no opportunities during London. Do we get an opportunity during New York? So we've come even higher now, we've taken out London highs. We get a break to the downside, and we do get a fair value gap during New York. So this does fit our plan. I would be happy to take this trade. And we can go ahead and trade to the downside, stop above the highs, 11.2. So we're looking at around a 13 pip stop loss. 13 pips should be fine for this. Target a 1 to 2. And do we get tagged? So we're now tagged into the trade, and we run to take profit. So we get a plus 2% right here. A very, very simple trade. Again, there's news. So potentially you might not want to trade news, and especially red folder news, but like I said at the start of the video, I'm not really taking much notice of news. So let's just go back and see kind of, you know, what results we've got so far. So we've got 1 win, 1 loss, 2 wins, 1 loss, 2 wins, 2 losses, and we've got 3 wins and 2 losses. So overall, we've got a 60% strike rate on this strategy in the first 2 weeks of June. Super simple strategy. You don't need any daily bias. You don't need, any sort of supply and demand. You don't need any sort of complications within this strategy. Super simple stuff. Just a sweep of the previous daily high or low. Look for displacement in the direction that you're looking to trade. If we get a fair value gap, you can look to enter at the 50% if you want to do that and reduce your stop loss. And then as you can see, we've got a 60% strike rate. At the moment, we would be up around 4%. So absolutely brilliant, results for the first 2 weeks of June. So overall, this trading strategy is super simple. If it does help you out, I would appreciate it if you could drop a like on today's video. As always, if you've got any questions, feel free to drop them in the comment section down below. And, go ahead and go and test this strategy and see how it performs for yourself. And, let me know in the comments, let me know on Instagram. And I hope this strategy does change your trading and bring you success. So it's just that simple, guys. Thank you very much for watching, and I will see you in the next one.